Welcome back, CTKS students and elite service members. Before we get into the markets, a quick update. All the cryptos inside the service have now been released. Last month's color was blue. This month's color is green. We're going to do something really specific. We're going to look through row 1, row 2, and row 3, looking specifically at the paths from last month. This is in direct response to a comment that Miles made. In yesterday's video, Miles talked about how is all the intercorrelations and interconnections, why are they moving the way that they're moving? I gave a bit of a detailed analysis and I'll just go through it, but the major point is this. The US sessions over the next few days will be very important to either confirm or deny trend changes. And I said to Miles, the big moves up in the main markets from the S&P 500 and the NASDAQ are nothing more than retracements in a downtrend. It's hard to get excited and call this a trend change just yet. And if you've been doing the cheat sheet, you absolutely understand what I'm talking about. Before the main markets open in the past trading session, I put these charts up on LinkedIn, on social media, and I said, discussion of the crypto strategic reserve move Bitcoin. Yes, but. This yes but is really important. The intercorrelation and interconnection were the real issues. So saith the major index futures. Now what does this mean? It means that the S&P 500, the NASDAQ, the Dow, and the Russell confirm or deny Bitcoin's upward momentum or downward momentum. We saw a bit of a kick up, and as I said to Miles, this is nothing more than a retracement in a downtrend. We'll have to see how the markets play out. Now I'm going to do a deep dive across all of those rows for you, and I'm going to talk about the paths, and I'll reveal those because I talk about them inside the service. With that said, let's run the numbers. A lot of people say you can't time the market, you just can't figure out where the market is going. Respectfully, I say, that's not the case. If you're an investor or a trader, it's very important that you spend time in the market, but also that you develop the skills to time the market. Now, what I was saying to Miles in that comment that I made before the US markets open was one about the market's intercorrelation and interconnection. You can see today we saw a lot of double-digit negatives, and this was because of something that happened inside the cheat sheet. If you were working inside your intercorrelations and interconnections, you weren't caught off guard by this, you were expecting it. And we can see Nvidia came down nearly 9%, Amazon nearly 4%, Tesla just a tad over 4%. A lot of people will say, there's no way on earth you could have predicted this, but actually there is. Let's have a look at what the S&P 500, the NASDAQ, the Dow, and the Russell did. Remember how Bitcoin was just shooting up to the moon, and then what happened? We've got a pretty clear correlation here. What we can see is that we had a push up in the major indices and a push down, a push up, a push down, a push up, a push down. And guess what happened to Bitcoin and crypto and pretty much everything else? You can see it in front of your eyes. This is the problem. People do not understand financial markets and they get slaughtered financially because of it. As CTKS students, you've got a deep insight into intercorrelation and interconnection that's sadly missing from just about every news source. And this is a bit of a problem when you think about it, because it means that people get into the market and they literally just gamble. That is no way to make consistent profitability. Unfortunately, the only consistency in retail gambling is losing. And note that I said retail. Professional gamblers, they're not like retail gamblers. A lot of people just say, I'm going to take my money and throw it on red or just use the financial markets like a casino. Well, if you do that, just bear in mind, the casino is a multi-billion-dollar organization based on the fact that people can't control their emotions. As I was talking to Miles about the fact that we had a big retracement, but that was going to be confirmed or denied by the main market's direction and intercorrelation. And the main market said no. We're going to have a look through the cheat sheet, and you can pick it up free of charge from CTKSmethod.org. Just scroll down and you will find this particular area, the cheat sheet. Just download it there. We're going to look at the cheat sheet now. Intercorrelation and interconnection are vitally important. In row 1, which is comprised first and foremost with the VIX, we saw in the past trading session the VIX is coming up and it's keeping on coming up. Notice the month has not shifted into the new month. In terms of trading, this spike in the VIX was the very thing that brought Bitcoin and the major indices down, but we'll go step by step through it. I would also suggest you revisit week 2 in the profiting course. Make sure that you understand the cheat sheet components, such as the VIX. All of the cheat sheet components are covered in week 2. And just to get your bearings, the VIX, the DXY, dollar yen, the 10, the 2, and oil are all row 1. If these are going up, it's really bad. We don't want to see these guys go up, because if they go up, the probability is everything else will tank. And row 2, if they're coming down, that's not good either. That's a confirmation on row 1. So what you see is row 1 and row 2 confirm each other. Row 1 and row 2 will feed into row 3, which are the major market indices. Yes, you can time the market. A lot of people will say, oh, you can't do it. They may not be able to do it, but you can. On the 20th of February, we saw that the VIX was losing this negative price momentum, which pushed the major market indices positive, and then started to go positive, which weakened the major market indices, including and of course crypto. What we're seeing now inside the market is an increase in fear. Typically, when we get an increase in fear, we see the DXY going up. In the past trading session, it came down. The thing to remember, the VIX turned around on the 20th, but it took some time for the DXY to actually gain some positive momentum. And unfortunately, as the DXY gained its positive momentum, the market started to retrace quite harshly. We use dollar yen to confirm the trend in the DXY, and the DXY's trend is really important to confirm. You'll see that these monthly price paths, which are just part of the service, are drawn up at the start of the month and then they are not changed. We closed out on the negative price path of dollar yen. What we can see in the 2-year is a big reduction in the 2-year. Now, you might remember C19 and what the yields did then. They basically fell off a cliff. We can see right here, this is around the 20th, this is when the VIX started spiking, the yields started dying. And what are the yields telling us now? They're telling us that in all probability, the VIX is going to continue spiking up. This is what that inversion means. Typically, the yields and the VIX and the DXY all move in the same direction. Under different circumstances, such as extreme market stress, they move in opposite directions. And of course, cutting rates is also playing into this. But it's really important to keep your eyes on this. When we get a diversion from the normal, that means that we must pay attention. When we look at the US 10-year yield, we can also see when the VIX started spiking up on the 20th, the yields absolutely and utterly cratered, both the 10 and the 2. Typically, when this occurs, the cost of money gets far cheaper, and people say, fantastic, I'm going to put my money into the stock market, until certain events occur. More on that a little bit later on. With US oil, we can see that negative normalized price path and US oil basically finishing where we anticipated at the start of last month. Anyone that's inside the service is elite because you understand where the markets are going, you understand the structure, and I make a lot of time and effort into helping you to understand what it means for the next month. Across the years, I've talked a lot about the changing of the guard. Typically, what occurs as the VIX spikes up, the DXY also spikes up, and the yields spike up. What we've seen is something a little bit different. The VIX is spiking up, the DXY is lagged before it spikes, and the yields are moving in the opposite direction. You have to be fluid in your understanding and application of CTKS principles to current market conditions. Now, we're going to look through row 2, which is the basic risk-on chart. So these risk-off charts, if they're coming up, it's typically bad. But just remember that the VIX controls everything and then it filters through all of these other charts. And inside row 2, junk bonds is typically a just mirror image of the VIX. The words typically and not always are important. The VIX is your major focus. And then we're just seeking to stack probabilities through different charts. We saw that the VIX was following the normalized positive price path and has just withdrawn from that in the past trading session. What was happening was particularly interesting. Junk bonds is a very good indicator of risk on and risk off activity, but its indication is also influenced by the yields, the 10 and the 2. As the 10 and the 2 were both sinking, that put a degree of upward price momentum into junk bonds from a relative perspective. But what we've seen, junk bonds has finally got the memo from the VIX, and the memo is behave. Or more the point, come back into directional correlation, and we're starting to see that now. The thing to note is the euro is the opposite of the DXY, as the DXY was coming down and started just to retrace recently. That put negative price momentum inside the euro. Typically, when the euro goes up, it's fantastic for the stock market and for Bitcoin. But the underpinning issue is, what is the VIX doing? And you saw that the VIX based and started to take off. That is the key driver of risk at the current time. Typically, to understand forward price momentum, we need to look at non-mainstream pairs, such as the Aussie dollar in currency. And we saw that the Aussie dollar was just going for it until the VIX started to spike. Remember, the VIX was doing this and around the 20th started to do this. And what have we seen in the Aussie dollar? It's come down. This is a very good indicator. I find the Aussie a better indicator of market sentiment or market risk than the euro dollar. You have to be really careful of retail sentiment. Retail sentiment is just a continuation sentiment. If it's gone green, especially if it's a couple of days of green, well, it's going to $1 million, trillion, quadrillion, billion dollars. And if it's red and continues to go red, it's going to zero. Now, what do I mean by that? It's really important to understand RTP, or Retail Trade Perfection. RTP is what you're getting taught on free YouTube videos, and it will destroy your finances. It's not free for no reason. For example, if you wanted to become a doctor by learning free YouTube videos on medicine, good luck getting board certified. The process of normalization is also really quite important. Even though gold was traveling above the normalized positive price path, we expected a degree of normalization, especially because gold had been going so strong. Because gold is in row 2, what it's basically saying to us is that it was weakening. And we saw that silver was following the normalized positive price path. Just bear in mind that these paths are created at the start of the month and then they're not changed. What did this actually represent? It represented the silver couldn't get above a level of structural resistance. These paths are not random. They're built from CTKS structure. So if the structure inside the market is too strong, you will see pullbacks. And because it's row 2, which is measuring risk on, that is indicating risk off from around the 20th. So what we saw is the VIX going for it and selective, sensitive row 2 starting to retrace. What about Dr. Copper? Dr. Copper was going absolutely gangbusters. Why? What happened? The VIX at the start of the month was coming down, and then it flattened out, and then it said, yeah, boy, time to just go for it. Now, what happened in that period of time? Around the 14th, copper, which was incredibly overextended, came back to its normalized positive price path. So all of that premium that people were buying into was absolutely taken away because of normalization. But the fact that copper is still following this normalized positive price path is positive for the markets. Now, what we really need to keep our eye on are the row 3s, because row 1 and row 2 feed into row 3. Row 3 are the major indices, such as the S&P 500. We can see from the start of the month it was following the normalized positive price path, and then the VIX started spiking on the 20th. What's happened since then? Well, this particular area of just a technical retracement, that's what I was saying to Miles. It's just a technical retracement. We need a follow through when the main markets open. This comment was of course made before the main markets actually did open, and they came up and then they retraced, which means that this market is still under resistance. It's nothing more than a retracement inside a downtrend. When we look at the Nasdaq, we understand that we must always stack probabilities. This is typically where people will look first. For example, if they're looking to invest in Tesla or MicroStrategy or Apple or something to do with high tech, they'll look here. But this is a huge mistake. You need to look at row 1 and row 2 first, because this upward momentum until the 20th was caused by the VIX decaying. And when the VIX started to spike up, it spiked down all the major market indices, and the Nasdaq is no exception. We had a very, very negative movement inside the Nasdaq and a retracement in the past trading session, not this one, the previous one. And that was when Bitcoin and crypto were just putting in double-digit gainers. But crypto suffered now double-digit losses because the major markets failed to confirm any trend change. You would know this, and you can see this if you're properly looking through the cheat sheet and you're properly assessing your three-dimensional paths. The paths were becoming weaker and weaker and weaker, and this was because of structural issues inside the markets. When looking at the Dow Jones, the Dow is under resistance. It broke out from a very, very precipitous drop. That's all you could call it. It was really bad. On the 20th, when the VIX spiked up, the Dow absolutely crumbled. And what have we seen now? This is a very negative CU. It's like CU price. You've got to be careful. The major market indices are showing weakness. It doesn't mean that they can't retrace from a technical perspective. You saw that particular retracement right there. That's when Bitcoin was going nuts, when all of your favorite influencers would say the bull market is back on, everything is fantastic. They don't understand how to time the market. Yes, they may have millions of viewers, fantastic, but those millions of viewers are getting crushed because they don't understand how the markets or why the markets work the way they do. And when we see the Dow from about the 7th, well, literally from last month, the Dow has been under negative price momentum. The decay in the VIX didn't do much for the Dow, didn't do much at all. And this is a bit of a confirmation as to why the yields are coming down more strongly. One thing to note, if you can time the markets, you're going to do really, really well. Remember, this little uptick in the Russell was a double-digit gainer across the crypto market. Unfortunately, a lot of crypto has retraced, but if you understood what was happening, you would have been selling yesterday. Now, a lot of this has to do with the Trump tariffs. President Trump is saying, you get a tariff, everybody gets a tariff, and on the 4th, the tariffs will be implemented. In other words, the markets have been retracing because of tariffs prior to their introduction. And if you were following this particular price action, you would be looking at it and saying, be careful, the tariffs are going to get implemented on the 4th. Don't forget, everything comes down to structure. You have safety nets under every single price, but you need to know where they are, where they're located. When we look at Bitcoin, we saw that Bitcoin was going negative. It was literally following the VIX. Don't forget that Bitcoin picks up on risk on or risk off behavior. And it was basically saying, even though so many people were trying to prop up Bitcoin, it went to the negative price path. And it pretty much literally closed out on our anticipated closure for that month. Now, the thing to understand, and I will explain this inside the service on the events to come for this month, especially when focusing on Bitcoin. I drew this path in when I released Bitcoin. You may think that I may have changed it. I don't change anything. I just draw the paths from a structural perspective. Even though we had a big push up in Bitcoin, I didn't necessarily draw the price path up like that, because I'm interested in the structure of the market. Also, intercorrelation and interconnection means that we are still under a degree of resistance. Until we can get away from this resistance, it's a downtrend, and downtrends are absolutely fine. You can make double-digit gains in downtrends. In fact, the whole profiting course is about making money from downtrends, going long at spot. If you've not done the profiting course, you really need to. It will make everything make sense, and I spent over a year creating that course. We saw a similar thing with total crypto market cap. Even though the VIX was coming down, crypto kept on coming down, because crypto is a very risk-sensitive asset class. Of course, this can be a little bit perplexing, but just keep in mind what the main markets row 1, row 2, and row 3 are doing. It does take a degree of experience to get in with timing the market, but it can be done. And the good news for this month is that we're still following the normalized positive price path. Remember, structure is everything. So what needs to be done? What is your strategy going forward? Until we get a trend change, especially in the major market indices, we're going to see continued negative price momentum. But don't forget, even if you get a retracement like this, it can turn into be a phenomenal day. But you must be aware of what's happening in row 1, row 2, row 3. You literally need to know all of them. By understanding how the cheat sheet intercorrelated and interconnected with each other, I was able to write that response to Miles, and the response to Miles was, until we get confirmation of a change in trend on row 3, we're still under duress inside the market. I would suggest going forward, please keep your eye on the VIX. Make sure you understand what the yields are doing. Also, the Dow and the Russell are more informative than the S&P 500 and the Nasdaq. Also, keep your eye on the Aussie dollar. Junk is starting to get with the program, but the Aussie dollar has been leading for quite some time. That is a leading signal. I would also definitely recommend going through week 2 again. Just make sure that you understand how all of the cheat sheet components actually work together. And inside week 3, you'll look over my shoulder as in a negative, really hostile negative market condition, I was doing trades, long at spot, which showed fantastic profitability. You can make money in any market condition, but you must understand what you're doing. In week 4, it all comes together. Make sure that you do not fall for the RTP trap, which is retail trade perfection. Retail trade perfection will destroy you and your account financially. Hopefully, this explains a little bit better what I was trying to suggest to Miles, that it was just simply too early to either confirm or deny a trend change in the market. As this answer was done before the main markets actually open, we can now confirm it was too early to call a trend change. Just keep your eyes on the cheat sheet and you will be able to look at the market like this. It does take a little bit of time, but it's thoroughly worth it. You worked hard for the money that you put into the market. Work hard to keep it and to grow it. And just one thing with the crypto reserve, just please keep these in mind. Made in the USA, these are crypto tokens that should do incredibly well from Trump policies. But I would suggest if you're investing in USDC hoping appreciation, you may want to rethink that. That means that if you want to see a 100x gain in USDC, I hope you don't see it. Please let me know in the comments if you know what I'm talking about, and maybe explain it to others if they don't understand. Just like Miles, please keep your questions coming. I'm here to help you and to support your learning. And thank you again for commenting, my friends. And if you're new to the community, this is literally a community where I talk to my students. So a very warm welcome to you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.